Introduction: the hidden power of patience. Patience in Forex trading is more than a skill, it is a way of thinking, a mindset, and a lifestyle. The market doesn't reward speed or emotion. It rewards disciplined observation and thoughtful action. Think of patience as a bridge between knowledge and execution. You may know all the technical indicators and strategies in the world, but if you act impulsively, knowledge becomes wasted effort. Deeper meaning. Patience is a mirror reflecting your inner self. If you can wait calmly in the market, you can wait calmly in life. If you act recklessly, you will see recklessness reflected in your trading results. Practical insight. View patience as an investment. Every moment you wait, every trade you skip because conditions aren't perfect is capital preserved and experience earned. Why most traders fail without patience. Most traders fail because they're trapped in time illusion. They want quick profits and immediate results, forgetting that Forex is not a sprint, it's a journey. The deeper truth. Impatience is a psychological tax. It costs money, confidence, and emotional stability. Traders who rush are paying invisible fees to the market every day. Example: John enters trades impulsively, hoping to catch the move, but loses consistently. He treats Forex like a gambling machine instead of a controlled system. The patient trader waits for clarity and confirmation, reaping rewards with less stress and more certainty. Practical lesson: the market is patient. You should be too. Treat waiting as part of the strategy, not a hindrance. The psychology behind impulsive trading. Impulsive trading is emotion-driven, a battle between your short-term desires and long-term goals. Most traders act because of FOMO. If I don't trade now, I'll miss profits. We'll go deep. What is FOMO on later? Revenge trading. I need to recover losses immediately. Boredom. I need action, even if it's harmful. Deeper meaning. Impulsiveness is a reflection of self-control failure. Each impulsive trade is a mini lesson in humility. The market forces you to confront your ego. Exercise. Track your emotional triggers. Before entering a trade, ask, am I trading my plan or my emotions? Awareness is the first step toward mastery. Understanding time in the market. Time in Forex is an ally and a teacher. Traders often underestimate how trends and price actions develop. A single hour may feel like eternity in the market, but markets operate on larger rhythms daily, weekly, monthly. Deeper meaning. Patience teaches respect for natural processes. Just as a seed cannot grow overnight, trends cannot be forced. Waiting cultivates intuition, foresight, and discipline. Example: a trader rushes into US dollar to Japanese yen, loses on minor fluctuations. The patient trader waits, and when the trend develops fully, they profit handsomely. Patience lets you trade with the market, not against it. Emotional triggers and the urge to trade. Emotions are like invisible hands pulling traders off course. Patience is the ability to see the pull and resist it. Deeper meaning. Every emotional urge is a signal about your inner mind. If you react impulsively, you surrender control. If you observe and wait, you strengthen self-mastery. Exercise. When tempted to trade, pause for 5 minutes. Breathe, reflect, and ask, am I acting from clarity or impulse? This strengthens the mind and transforms emotional energy into strategic patience. Building the mindset of a patient trader. Patience is a mindset cultivated through awareness, discipline, and self-respect. It's more than following rules. It's internalizing them. Trading is a mirror of character. Patience in trading reflects patience in life. A trader who controls impulsive actions in Forex is more likely to control decisions in business, relationships, and personal growth. Practical tip: celebrate the act of waiting, following rules, and observing the market. Your wins will then be a reflection of conscious choice, not luck. The waiting game: why less is more. In trading, less often leads to more. Impatience pushes traders to act prematurely. Patience allows clarity. Patience in trading is a form of selective attention. You ignore noise, focus on signals, and choose moments that truly matter. Life rewards those who act with discernment, not those who act constantly. Example: impulsive trader, 10 trades a week, inconsistent results. Patient trader, 3 trades a week, wins consistently. Quality, not quantity, leads to mastery. Patience in entry and exit strategies. Patience applies to both entering and exiting trades. Entering early leads to losses. Waiting for confirmation increases success. Exiting too soon diminishes profits. Holding patiently maximizes gains. Deeper meaning. Patience here represents trust in natural progression. You trust the market to reward you for waiting, not rushing. This is a lesson that transcends trading. In life, success comes to those who wait for the right opportunities. How to train your mind to wait. Patience is a skill that can be trained like a muscle. Techniques include following rules strictly, using higher time frames, journaling emotions and trades, setting alerts instead of staring at screens, meditation and deep breathing. Training patience is training your consciousness. You learn to observe, reflect, and act only when conditions are favorable, a powerful skill for life and trading alike. Daily habits to improve trading patience. Begin the day calmly. Review charts with a plan. Take breaks and avoid compulsive trading. Focus on quality over quantity. Practice deep breathing or meditation. Exercise. Before each trade, ask, does this trade meet all my criteria? This reinforces self-discipline and gradually transforms patience into an instinct. Understanding and conquering FOMO in Forex trading. FOMO, or the fear of missing out, is one of the most powerful enemies of a trader's patience. It is the feeling that you must be in every trade, that every market move is your last chance, and that if you don't act immediately, opportunity will vanish. What FOMO really? FOMO is not just a trading problem. It is a psychological phenomenon rooted in human behavior. Our brains are wired to avoid missing out because evolution favored individuals who acted quickly on opportunities. In trading, FOMO manifests as entering trades too early or without confirmation, chasing price after it moves, instead of waiting for setups, overtrading to catch every move, ignoring your trading plan due to excitement or panic. FOMO is a battle between your ego and your logic. It tempts you to act impulsively, while the market rewards patience and discipline. Every trade taken out of FOMO is a trade against yourself. How FOMO impacts your trading. Loss of capital. Impulsive trades usually violate risk management rules, leading to bigger losses. Emotional stress. FOMO increases anxiety, creates tension, and reduces decision-making quality. Undermines discipline. Every time you give in to FOMO, your trading plan weakens, making it harder to follow rules in the future. Chasing the market. Buying after a strong move often means entering at the top. This leads to retracements and frustration. Example: Euro to US dollar spikes 50 pips upward. A trader, fearing he missed the move, enters impulsively. The price retraces 30 pips, leaving the trader frustrated and overleveraged. The patient trader waits for a retracement or a confirmed breakout, then enters safely, capturing the trend without stress. The psychology behind FOMO. FOMO is rooted in loss aversion. The fear of missing a profitable opportunity feels worse than the pleasure of making a successful trade. Social comparison. Seeing others profit, social media, forums, or peers triggers the urge to act. Ego boost. I need to prove I'm smart and fast. FOMO is not about the market. It is about your inner insecurity and desire for instant validation. Conquering FOMO is about mastering yourself, not the price chart. Real-life examples of patient traders. Jesse Livermore waited months for the right setups. Warren Buffett held positions for years. George Soros held trades until market conditions confirmed his strategy. Deeper meaning. Patience is not laziness. It is strategic restraint. The greatest traders succeed not by acting constantly, but by knowing when to act and when to wait. Common mistakes that destroy patience. Overtrading, ignoring rules, emotional decision-making, chasing false signals, comparing oneself to others. Deeper meaning. These mistakes are reflections of internal impatience and lack of self-trust. Awareness of these traps strengthens character, discipline, and patience. Using journals and records to improve patience. Keeping a trading journal allows reflection, self-awareness, and growth. Steps. Record all trades. Note emotions before and after each trade. Review weekly for patterns. Deeper meaning. Journaling transforms experience into wisdom. It makes invisible mental patterns visible, allowing patience to evolve naturally. Exercises to strengthen patience. Exercise 1. Waiting game. Pick a trade setup and wait an extra hour before acting. Observe your feelings. Exercise 2. Emotional pause. Pause, breathe, and write down motivations before trading. Exercise 3. Chart meditation. Observe charts without trading. Note trends and signals. Train your mind to watch without reacting. Deeper meaning. These exercises teach self-control, awareness, and disciplined timing, essential both in trading and life. The rewards of patience compounding. Consistency and confidence. Patience leads to less stress, consistent results, confidence and mastery, compounded gains. Deeper meaning. Patience is the foundation for sustainable growth. Traders who wait wisely create lasting wealth. Those who rush risk short-term gains and long-term losses. Conclusion: the slow path that wins fast. Patience is the secret currency of successful traders. Markets reward those who wait calmly, follow rules, control emotions. Patience in trading is a reflection of personal mastery. Master yourself, and the market rewards you. Master the market impulsively, and it will teach you harsh lessons. The market transfers money from the impatient to the patient. Final thought. Patience is not just a trading skill. It is a philosophy of life. The patient trader, like the wise gardener, plants carefully, waters consistently, and waits for the harvest knowing that time and discipline will yield the best results. Thank you for visiting our YouTube channel's huge library audiobooks. We have more books about financial, motivation, investing. Learn more Forex, trading, psychology, mindset. See you next books. Don't forget to subscribe if you want helps us. Please click on that black button you see down there.